Let's shift focus and let's bring on board the management of Godawari Power and Ispat. We have Mr. Dinesh Gandhi, who's the Executive Director, joining on the show with us. A very good afternoon to you, Mr. Gandhi. Thank you so much for joining us on ET Now. And first of all, help us understand how is the demand environment on ground, both when you talk about the domestic side of it as well as the global side of it. And also, if you could tell us which all sectors are contributing most to the demand that you are witnessing right now.
Our major play is iron ore pellet, and that pellet goes into the secondary steel manufacturers. So it is more of an infra-related sector where our product is consumed, and there we are seeing good demand for iron ore pellet as well as on the finished steel side.
Right, so good afternoon. This is Vinny joining in the conversation as well. What we also want to know in terms of the China's property market recovery, that has been weaker than what was expected. Now, that is leading to a fall in the iron ore prices. So, what is your view in terms of where do you see the iron ore prices heading from here on?
See, iron ore prices, before the, holiday season in China was ruling at about $130. But because of the inventory at the port in China, as well as the demand has been weak after reopening. And therefore, you have seen some reduction in the prices in Chinese market. But, it is very difficult to predict China, how the steel demand and consumption because of the real estate problem in China. But domestic market, there is a good demand for the iron ore as well as iron ore pellet. And, majority of our products are sold in the domestic market. So even like while the international market, there will be a fluctuation, but domestic market is more or less constant and prices are ruling where it was earlier.
Right, sir. Higher coal prices actually impacted margins of sponge iron and secondary products in Q3. If you could kind of tell us where do you see the coal prices heading from here on, and also consequently, if you could tell us how will the spreads of these products be impacted?
See, coal is basically required on the finished steel side. So far as we are concerned, our majority of the profitability and the volume is in iron ore pellet. But when we make sponge iron, that is where we are, impacted by the coal prices. Coal prices are slightly on the higher side, but the impact of that is only on the sponge iron production and the production of the finished steel side. So we believe that whatever price increase is there in the coal, it is being passed on to the consumer. In recent past, also in last 10-15 days, we have seen some uptick in the prices of finished steel in domestic market, especially in the secondary side.
Mr. Gandhi, also the consolidated margins have expanded from 13% in Q3 FY23 to 25% in this quarter. How have the raw material trends been this time around across the products, and what is the margin outlook for the next couple of quarters or next year, if you could highlight that?
So far as again we are concerned, we are backed by the captive iron ore mining. Our pellet capacity, 75% of our iron ore requirement is made by the captive mines, and only to the extent of 20-25% we are exposed to the market. So our profitability because of the captive iron ore mines is on the higher side, and because the pellet realization during the same quarter last year was lower, and realization in the pellet in the current year has increased, and therefore there is an uptick in the operating margin in our case.
Mr. Gandhi, your company recently received an environmental clearance for expansion of iron ore pelletization capacity at Chhattisgarh. If you could tell us by how much will the capacity increase by, and also how will it aid financially for you all?
Yeah, so our present capacity of iron ore pellet manufacturing is 2.7 million ton, and we have got the approval for setting up an additional 1.5 million ton of iron ore pellet capacity. We would be starting the construction very soon for additional 1.5 million ton, and that is expected to come in production, in Q1 FY26. And there is a sufficient demand in the market, and this capacity of additional 1.5 million ton will be entirely merchant, will be sold in the market till our integrated steel plant, which we are proposing to set up, is commissioned in FY28. Till then, and after that, that material will be consumed in our captive steel plant.
Right. Also, talking about in terms of you have about an 800 crore net cash position, what are your plans for utilization here?
this case is being conserved only for the purpose of investment in the Capex, like Capex for the pellet as well as iron ore mining expansion. In fact, we are expanding our iron ore mining capacity from 2.35 million ton to 6 million ton in Aridongri. So the investment will be, the mine will be there. There will be investment in the iron ore pelletization plant, and future cash flow will also be deployed in the steel plant.
Right. So on that note, thank you so much for joining us on ET Now, actually, to share about what's exactly the outlook going ahead for the company and what's working and not working for the company. That was the management of Godawari Power.